I just hear these voices. I'm like, where are you getting this from? I don't understand. You're listening to some random crappy macro guys, never run a portfolio, telling you something, and you're like, see, he said it. Inflation's coming back. We're all going to lose money. I get it. We've all got our net worth in this entire fucking trade. We want it to work. Please, 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 just focus.
Raoul Pal argues that wage growth is slowing, and home prices, due to lagging effect, will bring down shelter inflation, which is the largest part of core CPI. He claims there is no real inflation threat, citing leading indicators like the Cleveland New Tenant Rent Index, which has turned negative. Powell rejects fears of 1970s-style inflation, arguing that this is just a normal economic cycle. Additionally, he dismisses concerns about tariffs being inflationary and believes market dips are buying opportunities. Regarding Bitcoin, he argues that it is not overvalued and that the current cycle is far from its peak, suggesting it will follow historical patterns and perform better than many expect. Also, if you enjoy listening to crypto-related content, please show your support by liking and subscribing to this channel by following the link in my bio, and get access to my free daily crypto updates and expert predictions direct to your inbox. Each newsletter contains on-chain data, forecasts and expert predictions. All of this is available free of charge. It only takes a moment to sign up and you can always change your mind later. Now back over to Raoul Pal.
So, wages. Wage tracker growth going lower. Therefore, we will not see wages increasing for a while, if at all, depending whether AI breaks it entirely. Ain't concerned about that. Oh, home prices. Well, home prices are a massive drag because there's a 17-month lead. So home prices will be bringing down CPI shelter, which is the largest part of CPI. If the largest part of core CPI is shelter, it ain't going up. When rates go down, guess what? Owner equivalence rents come down, and that drags down CPI. Look at the Cleveland New Tenant Rent Index, 3-quarter lead. It's puking. It's gone below zero. There is no inflation, my friends. Let's take away shelter and look at all items less shelter, because shelter's the lagging one, 1.9%. I mean, really, dudes? And then we'd use the Mount Fuji chart of truth that Julian and I have been using forever. Like, we take all the inflation episodes, the major inflation episodes, compare them to this one, and guess what? Inflation is coming lower. So we will get cyclical inflation later in the thing. There's nothing structural. We're not going back to the 1970s. None of that's going to happen. Literally none of that's going to happen. Tariffs are not inflationary. It wasn't inflationary last time. It won't be this time. None of that is going to happen. It'll just be a pretty ordinary cycle. So that tells me dips are for buying. The cycle top. Again, all the fucking noise on X. The cycle top is the top. It isn't topped early. Oh my God, it's the worst. I'm so scared. We're nowhere near. The core risk indicator. Are we overbought? No, nowhere near. Bitcoin valuation model. Are we overvalued? No, nowhere near. Let's have a look at it versus the 2017 cycle. Are we near the top? No, nowhere fucking near. Are we going to follow this exactly? No. Are we going to do decently based on this? I think so. I think it's going to rhyme more than people expect, and we will have a stronger cycle than people expect. The Nasdaq, for those of you who still bother to trade equities, which I know some of you did, it's following the same pattern. It's all like a rerun of the previous Trump. Because he's got the same policies, basically, apart from with the new tech stimulus. So let's go back. Again, Julian talked about this in his presentation, but I want to hammer it home to you. You guys all have PTSD from the last cycle. It finished early. Is it going to happen again? Am I going to lose my money? And am I going to round trip all my gains? Will I die? Will I have to drink Bud Light for the rest of my life? Or can I drink champagne? All of these stories. Blah, 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 blah. The orange zone market goes higher, right? But it didn't really in 2021. Well, what happened in 2021? Oh, the ISM peaked. Do you remember? Raoul told you a minute ago, when the ISM peaks is when you need to be worried. Oh yes, the ISM peaked in March 2020, 2021. Previously, it peaked in January, February 2018. Guess what? That's when ETH peaked. Also 2013. It works every time. And where are we now? Oh, we're at the bottom of the ISM. Oh, how silly of me to be worried about the about the market peaking. For fuck's sake, people. And so, I don't even know what this chart is. Oh, yeah. From the halving. We've only done, is it from the halving or from the low? We've only done an 8x from the low. We did an 85x and a 46x. We only started. Liquidity, as I said, peaked in March 2021. We're now negative currently by this measure of liquidity. If I use the global M2, we're just positive, but we're nowhere near there to be a liquidity peak. As we said, the ISM peaked March 2021. So let's look at it. That was what was happening in March 2021. Look at that. Financial conditions were falling. And the ISM, well, it had peaked at over 60. And let's look at the current one now. You ready, kids? The opposite. It's bottoming. And the green, the financial conditions index, will be going the other way. And the last time it did this, it went up a lot, blah, blah, blah. This is the chart. Again, everyone's like, where's my banana zone? It's failed. It's like the banana zone is a period of time and a price action that is nuanced because it goes in bursts and then corrections. So the banana zone started from September onwards last year. The market came up and did what it did every single time. The correction after banana zone phase 1. So correction phase. Then banana zone phase 2 kicks in and it goes fucking la. It goes bananas. Then guess what? Correction phase 2 fits in and then we go to the final blow off top. And you've got to be embarrassed. You've got to be embarrassed from all of your complaining when you look at that chart and look at how small that squiggle is for the correction phase. You've got to be embarrassed. Oh no, I forgot. You bought AI tokens and they've gone down 90%. I did try to tell you. I gave you the don't fuck this up thesis. If you could follow it, don't use leverage. Generally have 90% of your portfolio in the top, 5 cryptocurrencies of your choice. You're generally fine.
Thanks for watching. Don't forget to subscribe to access my free daily crypto updates and expert predictions direct to your inbox.